Day of the new year. Good morning, Todd, my engineer this morning, and my able staff, Canyon, my roadie, helping me get set up here. We are on time and on the air. It looked like we weren't going to do it there. We had a plethora of things to get ready today. That's the word today, Todd's word of the day, plethora. My name is Gilbert Carmona. I'm an enrolled agent. An enrolled agent is a person enrolled with the Internal Revenue Service, like CPAs and tax attorneys. We are privileged to represent taxpayers in all matters of appeals, problems. I can help you with anything, any taxation issue you're facing at the state level or the federal level. I also do business planning, business consulting. I'm a financial planner. But I'm here to talk about that little thing we call taxation. Taxation. And it's hard to not talk about politics when you're talking about taxation, especially when you see what Washington does with our money, our hard-earned money. There is a government shutdown. I'm going to talk about that and how that affects you. Todd, did you notice how your life was impacted and everything that's different in your life since the government shut down? Yeah, me neither. My name is Gilbert Carmona. If you need me, you can call me at 828-289-9300. I have two offices, one right here at 113 Whitesides Road in Rutherfordton. I have another office in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. I just like saying that, so I say it every time. It sounds beautiful. Well, if you've ever been there, it's beautiful and historic. Downtown Tryon. You can call the radio station if you have a question about taxation or a comment. Somebody last week called and made a comment. Well, several people called. I had some questions, and several people called and made a comment. Some people didn't understand my comment about John F. Kennedy. Actually, one person didn't understand my comment about John F. Kennedy. That was a quote that John F. Kennedy made while president. Let us not seek the Republican answer. Let us not seek the Democrat answer. Let us seek the right answer. The right answer for now and the right answer for the future. Person said I didn't know what I was talking about, which I don't. It was a quote. John F. Kennedy said that. That's what we need today. We need the right answer because we have a lot of gridlock. And it doesn't look like it's going to stop anytime soon. And the part that is, it's over $5 billion that our president wants for border security. Okay, he calls it the wall, but we know it's not a wall. Parts of it are going to be a wall. Parts of it are people. Parts of it are electronic surveillance. It's border security. That's the issue. Every person in this debate, whether it is the Republican answer or the Democrat answer, is for border security at one point or another in their career. There's a great little video came out about, actually, it's the audio. Schumer made a speech in 2000. I don't have it. This is just ad lib. I wasn't going to get into this. The show isn't Gilbert Talks Trump. The show is Gilbert Talks Taxes. But again, how can you talk taxes without talking politics? It's the hand in glove thing. One goes with the other. Tax policy is not about tax law, believe it or not. Tax policy is about social engineering. Congress has no power except taxation. And how do they get there? They don't. They do not. Let me get that. It's in the Constitution. Read it. Section 7. Congress has no power. They cannot decide they're going to do something and go ahead and pass a law to do it. They control the money supply, and they control through the money supply and where the money's going to go is how they control things. So if they want to engineer something socially, they reward it through tax breaks, tax credits. If they want to punish something socially, how do they punish it? Tax credits, higher taxes. So the two go together, because if it was about generating revenue, this program wouldn't exist, and everybody else talking about taxes wouldn't exist, because we would have a flat rate. there would be a 7%, like North Carolina, 5.75% flat rate on taxes. Only a handful of states have that. So why do we have a quote-unquote progressive tax rate? Because we have a Congress that wants to socially engineer a result, and they do it through taxation. So it's impossible. You can't talk about one without talking about the other. But I just hate that we spend so much time talking about it, because it gets into opinions and personalities and all this other stuff that really you wish had nothing to do with it, but it does. So they are in a stalemate. So the question is, what is the IRS doing? Because they are part of the government shutdown. Now, there is IRS personnel, as shocking as this may be to some people, there is IRS personnel that has been deemed necessary. So they have to go to work without getting paid, although they'll get paid later. They're going to get their money. It's not, don't feel sorry for them. So there's good news and bad news there. The good news is, the bad news. The bad news is that the IRS is or it's good news depending on how you see it. The bad news is the IRS is among the government agencies affected by the shutdown. The good news is parts of them are still working and will be working. So what services does the IRS provide right now? And they are services. They consider themselves a service providing agency. By the way, they're the only agency with a mission statement, Todd, and they're the only agency that calls the taxpayer a customer. They say that we are their customers, which I thought was nice of them. So during the shutdown, the IRS is processing electronic and paper filed returns. So if you are submitting a tax return, right now the only tax returns being submitted are prior year amended returns or prior year returns. People that couldn't file a tax return last year for whatever reason, people in disaster areas, people that are out of the country, people that whatever. There's many reasons are filing tax returns. Right now we have to paper file those because the electronic platform is not up and running. So we're filing those paper. They are processing those. There are people receiving those tax returns and filing them. Tax returns with ITIN, I-T-I-N, individual taxpayer identification numbers. This is a number that is not your Social Security number or an EIN. It's a third category that certain people get. Those tax returns are being processed. Disaster relief transcripts. Anybody in a disaster relief area, the IRS is working on that feverishly because we've had a number of disasters. They are designing and printing tax forms, Todd, so we don't have to worry about those tax forms. They are designing and printing them. And probably what the IRS does best, they are receiving payments. So if you owe them money, if you're an employer and you have withholding, they're taking that money. Don't stop. Somebody posted to one of the blogs I go to, I have clients in installment agreements. Should we still keep making those payments? Everybody, yes, keep making those payments. I don't know why you would even think not to. Keep making those payments. Keep sending them that money. Their computers are working. They are not shut down. Now, what they are not doing during the shutdown, and this is important, they are not answering the phone. That's number one. The number one thing they are not doing. As a matter of fact, I called the practitioner line. As a practitioner, as an enrolled agent, and any practitioner really, if you're a CPA, a tax attorney, enrolled agent, enrolled actuarial, any person that would have to call there and speak to a live person, we have a practitioner line. I tried calling it. I just said, hey, let me just go ahead and call. Why not? On Wednesday, because that was supposed to be their day back. And no, nothing. It said that they're not accepting phone calls, or the regular number, the 800-829-1040 number. They're not answering that phone number either. They are not issuing tax refunds. So even though they're processing your tax return, which is important because if there's dates that are important, you got to get those tax returns in before those dates. So that those issues are still out there. But let's say that tax return involves you getting some kind of a refund. They are not processing refunds during the shutdown. I actually have a client who was in a not, it wasn't an audit. It was we had a disagreement as to what his refund amount should be. Let me say it that way. And I, of course, prevailed 2 years later. It's how long it took to work it out. But 2 years later, I prevailed. The IRS owes my client $10,200 plus interest. And we got the case resolved the day before the shutdown. So I believe in miracles. I see them every day. It happened the day before the shutdown, got it resolved, spoke with the managing agent on the case, and they said, well, I'm good with this. Paperwork's done. I put it through for the refund. However, during the shutdown, they won't be issuing, so he's going to have to wait till it's all said and done. And how long is it going to take them to get back up and running? We don't know, because they get back to work. They're going to have quite a backlog of things to do. So they are not issuing refunds. So if you're waiting for an IRS refund, it's not in the mail. They are not processing amended returns. I said that earlier, 1040X returns, or any amended return, 1120X, 1065X, 990X, any amended return, they are not processing. They are not conducting audits or examination of returns. While that may be good news for some people, it's bad news for people that are in the middle of an audit or an examination of a return. Because my experience has been when they get back to work, we're not just going to pick up where we left off. There may be a host shuffling of personnel, and we may have to start all the way from the beginning again. So, Todd, let's go ahead and take that first break, because I'm going to get into some heavy stuff here when I get back. I'm going to talk about some beginning of the year issues that we may want to deal with right away, so when you do your tax return in 4 to 6 to 8 weeks, you don't have a problem. I'm going to talk about what's new for 2019, mileage rates, and a few things like that. I'm going to talk about e-filing. Going to talk about what's new with the tax law in general. This is Gilbert Talks Taxes on WCAB AM 590, FM 100.9.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business.
We are back. Gilbert Talks Taxes, WCAB. So if you need me, by the way, if you have any questions, you can also email me, gilbert@gilbertcarmona.com. And I got right into it. I just had so much information. I have so much information to get out. I didn't even introduce those of you listening to me live streaming on WCAB, www.wcab59.com. Looks great, Todd. You've done a great job with that. You can really see that. It looks. I know. It just jumps. I wore this tie thinking about our internet viewers. Those of you listening don't have no idea what we're talking about. And my hair does look fabulous this morning. So everything is good. Everything is a go. Just a person had asked me that question about the refund. Yes, they are. It's not that they're I don't want to say they're holding the refund. In the system, they've released it. The system's just not sending you a check. That's the problem, or releasing it. So they are not issuing the refund. We're still doing the paperwork. We're still processing it. It's just not happening. But more important, what I'm concerned about is we have a brand new tax law. And I've been saying it. I feel like I really beat that into the ground the last 3 weeks. The whole reason I came on in December, there was end of the year tax planning you could have done. There was a lot of things you could have done. We have this new law. We have a brand new tax form. I mean, this is a brand new form. The actual form has changed. This is not just a new interpretive law thing. We actually have a new form. So, I mean, I'm really concerned. I am concerned that we're going into tax season without guidance, because people are not going to be guided properly. And I'm predicting, going out on a limb here, I am predicting there's going to be a lot of mistakes on tax returns being done. And a lot of the preparer community is just not going to be educated and prepared. The preparer community will not be prepared. How's that for an oxymoron? They just don't know, because the IRS is not there to tell us. It's not that the preparers are incapable or they're just not they're lacking the guidance. To show you, as a preparer, as a practitioner, I get a lot of emails from the IRS. I get a lot of emails from all the different agencies specifically that I deal with, corporate and all the different things. My emails have gone down to 0. I got 2 emails all week, where normally I would get 30 or 40 emails telling me that this is happening, that's happening, guidance. 2 emails from the IRS. Well, I know. As tragic as that may sound to some people, to me, it's where even my wife noticed. She said, your emails, there's no emails been coming. I said, I know. The one email that I got was actually pretty exciting. We now have a start date for business tax returns. I can start filing business tax returns January 8th at 9 a.m. That is your 1065s, your 1120s, your 1120S, your business tax returns. January 8th at 9 a.m. I actually have several businesses that we have the tax returns done. The tax returns not done, but we have all the data we need to do the tax return. I've just been waiting for this date. We can go ahead and get started. The software, the final update to the software just happened on yesterday, actually. So we're ready. We're ready to go. They have not issued a start date for the personal tax returns yet. We are waiting on that. With bated breath, we're waiting for that. Usually it's somewhere around the 20th. It's going to be on a Tuesday. It's always on a Tuesday. Somewhere around the 20th, 21st, 22nd. One year it was late. It was towards the end of the month. But then last year it was early, towards the beginning of the month. So we just don't know. But business tax returns, if you're a business owner, you can go ahead and file your tax return this Tuesday. We're ready to go, and I am ready to go. I'm going to have several ready to go Tuesday morning. Now, so we're talking about getting ready to file these tax returns. There's a few things I run into every year that hold things up and getting started. One thing is, and this affects women more because they're the ones that have to change their name. Ladies, husbands, wives, people that are recently married, or if you have adopted dependents, if there is a name change involved, please consider doing that now. Getting the name change done now. This could complicate things later, because Social Security Administration, SSA, Social Security Administration, and the IRS work closely on name number match, is what we call it, Social Security name number match, and we run into it when, especially when there's a marriage involved towards the end of the year, and the names aren't changed on all the documents. Now, the name doesn't have to be changed on every document, like bank documents, W-2s, things like that. Those will still come across with an old maiden name. That's fine. We can process those. Those typically will not hold up a tax return. But if there's a name to the a name change to the Social Security, and that's not processed, or it's processed while the tax return is being filed, and both things hit the computer at the same time, you could have some problems. So if this is an issue, something that needs to be done, and you've put it off, let's say you got married towards the end of the year, or you're getting married like now, please go ahead and take care of that before you file your tax return, or wait and do it after the tax return. We'll just have to use the name on your Social Security card, your old name. So if this is an issue, please just be aware that it could affect your tax return. I've had a few where it's happened. I've also had a few where it's happened with adoption paperwork. I actually had one where it's happened with adoption paperwork. I've had a few with married couples, but adoption paperwork. Make sure all your adoption paperwork is taken care of if there is a name change involved with Social Security. Get that out of the way first, or wait, file the return, and then do that after. And every situation is a little different. If you have a question, give me a call. Again, my number is 828-289-9300. Call my office or send me an email with your question, gilbert@gilbertcarmona.com, and I will respond to that. If you need a new Social Security card, taxpayers, and this is right from the people, those of you looking to see this, right from the IRS. If you need a new Social Security card, if you have a name change and you need to get one, you file Form SS5. That's an application that is not an IRS form, that is a Social Security form, SS5 application for a Social Security card. You can also you can go online, ssa.gov. There's a lot of, and you can get the form there, or you can call the 800-772-1213 number to get a card. So dependent name changes, again, it includes adopted children with a new last name. Now, back in the day, I rarely see this anymore when a new baby, like, yeah, they're all new. When a baby is born, when a child is born, the hospital now takes care of the Social Security, processing that paperwork for your Social Security card. It's part of the paperwork you do. Back in the day, you were supposed to do it. So I would have dependents come that were 1 and 2 years old without a Social Security card because the parents hadn't done it. Now that's usually done right up front. It's automatic. But for whatever reason, if it wasn't done right away, get that before you do your tax return, because I can't do it after the fact. So there's a form there at W7A for adopted tax ID numbers. If you're getting a temporary adoption taxpayer ID number, I told you I had one case. I've had one case where we had a problem with that. It was what it involved. It involved a temporary adoption taxpayer ID number and ATIN. Just try to get this stuff done before, because if you're getting a refund, these little details will hold that refund up. Well, the fact that they're not at work will hold your refund up first, but hopefully they're going to get that all resolved. I'm going to talk about something that only applies to a few people, but I want you to be aware of it. ITINs, talking about these numbers. So there's Social Security numbers, there's EIN numbers, employer identification numbers. There's also a third category of numbers. Those are called ITINs, individual taxpayer ID numbers. This is a group of people or entities, it could be a business. These are groups of people that need to file a tax return, and they need a number to plug into or they need a bank account. They're college students from another country, foreign students. They're business owners authorized to come here and conduct business. There's a number of reasons why you would get an ITIN, an individual taxpayer ID number. Okay? Those it used to be that they issued those and they were good forever. Now they've started expiring those. So if you are a person that has an ITIN, or you know somebody, or you have a dependent that has an ITIN, be aware, ITINs expire. They have been expiring. They started this about 3 years ago, and they were doing it in, okay, so just like a social security number, an ITIN has 3 numbers, 2 numbers, and 4 numbers. They're looking at the 2 middle numbers. So the first couple of years, they just expired a few. They expired like 78 and 79. This year, they're expiring 7 numbers. 7 numbers. I am getting questions being texted to me. See, I'm glad I don't have a Twitter feed. Because if I had a Twitter feed, that's all I would do is read the Twitter feed. As it is, I'm getting text messages. I will talk about that one in a minute. Good question, just came through. So ITIN numbers will expire. This year they're expiring a whole bunch of them. So just be aware, because what will happen is you'll file that tax return, and if you're expecting a refund, you will get a letter, and they'll hold your refund. And actually, it's like that dependent doesn't even exist, or that person doesn't even exist. They'll recalculate your tax return without that person on the tax return. Now this year, because the exemptions are, we no longer have exemptions, it's not going to have the impact. But if you're getting a child tax credit, which you qualify for a child tax credit, and you qualify for certain student deductions with an ITIN, those won't count. So you want to make sure those are valid. If you have any questions about that, give me a call. Also, you can go to the IRS website, that is irs.gov, and you can read about ITINs, or you can call my office if you have a question. You can email me the number, or email me the middle 2 number. Do not email me the number. I don't want the number. The middle 2 numbers, and I can tell you if it has expired or if it's going to expire this year. Okay? So, and you have to fill out once they expire, they're expired, which is a whole new thing, because people were always taught these numbers are permanent, or at least these numbers are valid for as long as you need it. Now they're being told, no, they expire. So there's been some confusion about this. I know, because I've had it at my office, and I've told people, or I've sent letters out saying, you've got these middle 2 numbers, they're going to expire. And they go, oh no, these numbers never expire. Oh yes, they do. Yes, they do. So look into that. The other thing, if I get into this subject, this one's going to take all 15 minutes. I'm going to talk about traveling and standard mileage deduction. Let's go ahead and take the next break. Let's go ahead and take that. I talked about that, and I talked about that. Let's go ahead and take this. This is a good time, Todd, to take a break. Todd, you've been very quiet this morning. No, nothing. Yeah. Well, you just get excited when I talk about Trump. That's what it is. And I'm really trying to not take the bait this morning. Trying to stay focused. This is Gilbert Talks Taxes, WCAB 590 AM, 100.9 FM.
People come up to me all the time and say, Gilbert, thank you for doing my tax return. I just got my refund. Any idea what I can do with that refund? Oh, yes, I've got an idea. Call NC Tractor and Farm Supply on Railroad Avenue. Get yourself a brand new Massey Ferguson. You can call Phil at 828-429-5008. And when you're talking to Phil, mention you heard it on Gilbert Talks Taxes. You know what he'll do for you? Absolutely nothing. But me, he's going to give me a discount when I buy my Massey Ferguson. As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
This is Gilbert Talks Taxes, WCAB 590 AM, 100.9 FM. Those of you live streaming are watching and listening. You're seeing Todd's stellar work there, and it looks great. It really looks great. We're not on Northland Cable, Channel 5 anymore. So, but now that we have FM 100, our range has really gone up. I've heard people tell me they can actually hear me now over in Polk County. So let me get into this. Let me go right to this. Standard mileage rates for 2019. This is major stuff right here. They raised it 3.5 cents. It's up to 58 cents per mile. 20 cents per mile for medical and moving purposes. 14 cents per mile for charitable organizations. Okay, what does that mean? Those of you that drive your own vehicles, this is for people that are self-employed, people that own a business, or people that provide vehicles for their workers, their delivery people, whatever. If you're paying, you own that vehicle, they're driving your vehicle. There's two ways you deduct that vehicle on your tax return. And these are major numbers. That's what's so important about this, that this went up 3.5 cents a mile. I have clients that have vehicles that they rack up 20,000 plus miles a year, 30,000 miles a year. These vehicles are on the road 2 shifts a day. They rack up serious miles. So I mean, a 1 penny change is big. 3.5 cents per mile. It's up to 58 cents per mile. Those of you that file Schedule C as in cat, on your tax return, you're sole proprietor, self-employed, drive your vehicle to work, you know what a big number this is every year. So there's two ways. One way is what you call actual, what it actually cost you to operate that vehicle. So you depreciate the vehicle. Depreciation is to take into account the wear and tear on that vehicle. You depreciate the vehicle. Or you go with the standard rate. So if you depreciate the vehicle, you then take the actual gas mileage. So you save all your receipts. I recommend you use, if you pay cash, please just be sure to get a receipt. But I always recommend people use either the business debit card or a credit card dedicated to it. It's really easy. Then you have it all in one place at the end of the year to add up all your receipts. And I would use that same method for your tires, maintenance, oil changes, any expense related to that car. So we take that actual figure and we write that figure off, the depreciation. Now, if you took a one-time depreciation on your vehicle, Section 179 depreciation, which is part of a tax strategy. I've talked about that before. The tax strategy, it's a good strategy if you have a high income year and you need to reduce a lot quickly that year. You do Section 179 to expense your vehicle. Otherwise, we take a long-term depreciation. Now, we get bonus depreciation the first year, but after that, it's regular depreciation. Or you do all that, or we use a standard mileage rate. And that standard mileage rate includes, and I didn't mention insurance, but insurance is one of them. It includes the fuel, the depreciation, the insurance, the oil changes, the tires, the day-to-day maintenance, the fuel pump that goes out, the whatever that breaks is all included in this 58 cents a mile. Now, or 20 cents a mile for medical and moving purposes, or 14 cents a mile for charitable organizations doing charity work. Typically it's volunteers doing charity work. They claim that. Okay, there are some rules to doing this. You must maintain a mileage log. Okay, and there's no specific rule about how to maintain that log. They don't have a template that they give out and say you must follow this. They just say you have to have a log. In audits, I have most of my clients, I try to train them on a log and I tell them how to do it. So in all my audits, we've been good with this. I know there are some people that have failed their audit because they did not have a log at all. Now, the log can be very specific, where every day, so you print out what looks like, a fill in the blank paper with lots of little squares. You put in the date, your beginning odometer reading, and your ending odometer reading. Or if you did many stops, if you just use your vehicle for one thing that day, or if you did many stops, literally start, stop, odometer readings. So and what each stop was for, or where you went that day. So if you are a construction worker, your business is construction, you drove to the job site. From the job site, you went to the lumber yard. From the lumber yard, you went to the paint store. From the paint store, you went to whatever. You log all those. Okay, that is required. Where you went, what was business. And you're supposed to separate what was not business. On the way home, your significant other calls you and says, we need bread and milk. In my case, the phone call is, we need ice cream. We're out of ice cream. So I have to stop and get ice cream. That is not included in your log. That personal. Anything personal is not included. You're supposed to take that out. It's only supposed to be your business mileage. So you can drive, your vehicle. You use it for other things, and they know you do. Don't tell them, oh no, I use my vehicle 100% for business. That is rare. That is rare. You're always going to stop to do something. So you're supposed to keep that log. Now, just because you're doing mileage doesn't mean you don't save receipts. I have run into this. Now, my clients, again, I trained them, but I had a client that came from somebody else, and they said, oh, he said I didn't need receipts because I'm claiming mileage. My tax preparer said I need those receipts. No, that's wrong. The reason you need those receipts is because it confirms and validates that you actually drove these miles. How does it do that? When you get an oil change, or when you go for work. If you use a mechanic, you use an oil change place, you stop here up the street at my friend at RS Speedy Lube, you pull in there to get your oil changed, he will put on that little receipt ticket and that little other thing you get your odometer reading, and he'll tell you when your next oil change is. It's on a little sticker there on your car. That is validation. That is proof that you had your car in there on the 5th of January for an oil change, and your odometer had 87,300 miles on it. See, it confirms that on that date it had that. That's a third-party confirmation. Same thing when you take it in for auto repair work. Especially if your car is still under any kind of a warranty, they will definitely be logging that mileage. So you'll have that. Save that. Or my one client that burns, he does burn those cars up too. He puts an average of 20 to 25,000 miles on all of his vehicles. He drives a lot. He's a roofer. Very, very, drives all over the state. You burn through a lot of fuel, so you're going to have those fuel receipts. That's why I say it's good to keep it to one, like a debit card that you use specifically for that, credit card that you use for that. Or if you have a fleet account, some of these guys have a fleet credit card. They'll have a fleet account like at Exxon or somewhere. It's easy because then there's all your paperwork. Everything's in one place. You have that. I scan it. I have it in an audit. I just show them that. That's good because you're going to burn through. I mean, if your vehicle's getting, and the IRS, I mean, they know what to do. You go online, average miles per gallon of this vehicle based on manufacturer specs. Using that average, this many miles, you should have used 400 gallons of fuel or whatever, 500 gallons of fuel. Where's the receipts for 500 gallons of fuel? I don't have those. I paid cash, whatever. They'll say no, and they'll deny it. And it's a big deduction. I mean, 20,000 miles at 58 cents a mile. That's a huge number coming off your business. And if you have multiple vehicles, that can be a $20,000 or $30,000 deduction, an expense to your business income. So you don't want them kicking that back at you. Now, for people that use apps, apps on your smartphones, or you have a GPS device in your vehicle, those are acceptable to the IRS, except the IRS has one rule on any app that you use. You have to be able to export the data and print it onto paper. I know, as old school as that sounds, I've had younger people they don't understand why you can't just send the IRS a screenshot of your app with your mileage, because this isn't social media. You're not being audited on Instagram. You're being audited by the IRS, and they want something called proof. They want black and white proof. So you can use an app. Just be sure that app, and there are some very good apps, by the way, connected to your GPS. There is some of the more professional software. And again, when you're talking about a deduction this big, $30,000, $40,000, $50,000, depending on how many vehicles you have, even an individual or a married couple that has a business. I had a couple in yesterday, and we were they're new clients, so we were going through a lot of things on the front end, making sure I got them all ready to do this tax returns. They have several businesses. They came in, and we talked about this mileage thing a lot, and they are using a lot of miles on their vehicles. So this is a huge, expense. So some of the software, some of the apps, some of the better ones that do cost money, which it's worth it. Invest in it. It's going to save you money, actually real money, on the back end. I mean, if you're in a 15% tax bracket and I reduce your taxable income by $40,000, that's like $6,000. That's real money. So they'll invest in an app. Some of these apps are very good. You literally just turn them on, and they are tracking every move where that vehicle goes. Again, I just need to be able to print it and have a hard copy of it to show the IRS. Also, some of the better apps allow you to make notes in the app. So you can say, I went to the Smith job. Today, that 80 miles was for the Jones job. And you can even add what you did. I went to a meeting with Mr. Smith, Mr. Jones, and Mr. Morgan, the architect. You can add these notes. So when you print it, there's all these notes. And that kind of stuff in an audit really goes a long way, saves a lot of time. The other thing I see happen with apps is that people lose their smartphone. And they get a new smartphone, and they don't go with the same app. And if you wait too long, they won't keep your data. Typically, these apps not typically, you need to make sure that the app is backing your data up somewhere in the cloud or in their server somewhere, or your server somewhere. Make sure it's being backed up. Because if you lose your smartphone, what happens? The vehicle gets stolen and the GPS is in the vehicle. What happens? Is it this data being backed up? Or it gets in an accident and it gets towed somewhere. And a million things can happen. Just make sure that data is being backed up. Again, these numbers are big enough that it matters. And it's big enough that we want to track this data somehow. If you get a new phone, be sure to download the data. If you're going to switch apps, you don't like that app anymore, you went to a new app. And this has happened. These aren't stories. They're sitting at my desk. Where's the mileage? Oh, I was using the Where's My Car app. Okay, I don't have that anymore. Well, can we download it and log back in? Oh, I forgot the password. And it just goes on and on and on. Have a hold of this. The best time to do it is just right now. We're doing a tax return. We download it. We print it. Scan it into your file. Boom, it's done. No more thinking about it later. See, that took 15 minutes, Todd, just to talk about mileage. It's very important. I'm going to talk about, in keeping with the mileage theme, I'm going to talk about business travel and what is deductible and what is not deductible. Do you know that ship cruises are deductible? Of course, the IRS is going to do that so that these congressmen can all take their ship cruises. Didn't Nancy just go to Hawaii? Nancy went to Hawaii and Maxine went to the Bahamas. It's deductible. Let me tell you all about that when we get back. Gilbert Talks Taxes, WCAB, 590 AM, 100.9 FM.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300. 888-289-9300. This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherfordton. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you.
We are back. WCAB 590 AM, 100.9 FM. I like saying that. FM. I'm now on the air in the FM. That is what Youth in America should look like right there. Canyon sporting his Make America Great Again hat. Looking good in it, too, by the way. Well, I've never seen anybody look bad in one. So there. Going to talk about travel. And this is a topic that comes up now. By the way, if you need any help with any of this, Todd, do you know what they need to do? They need to call me. 828-289-9300. If you think you're getting a lot of information here, you should spend an hour with me. Well, you know, the clients that I told you about that I met with yesterday, the man said to me, the first time we talked, he said to me, "You've given me more free advice in 30 minutes than my CPA has given me in 5 years." He said, he doesn't even talk to me about this stuff. He says, "You're rattling it off the top of your head." Well, because it's what I do every day. This is my life. This is a day in Gilbert's life. So let's talk about travel. Travel. The reason this comes up now is this is the time of the year when businesses start getting a hold of, their conventions and their trade shows, and usually, spring meetings, things they're going to be doing. A lot of that happens now, January, February, March. They start getting a hold of this. There's a few big conventions come up early spring, and then of course we have summer travel. So, business travel. What business travel is deductible, and what type of business travel is deductible? I said it last week. Were you listening last week? You were, because you were monitoring that. So last week, see, I have a different engineer it's on off. One weekend it's Todd, one weekend it's Jay. But I feel like you're always with me, because you're always watching it, making sure that the live feed is good. So talked about it last week a little bit. People say, well, I don't know, and even it came up in a meeting, came up in several meetings this week. People say, well, I don't want to claim that because I don't want a red flag. Well, there is no such thing as a red flag. There are some things that are outliers, meaning they're not normal, and they will be flagged. But if it's right, and everything I do in light of IRS governance and what the IRS has put in their manuals. I apply it to that. And if they're saying we can do this and we do it, and then they question it, well, we can show them this is why we did it. It says right here. It says here that we can write this thing off, or we can't write it off, or we do this or we do that. I've actually had an audit where the auditor thought you could write something off. He said, "Well, can't you do that?" I said, "No, not according to this." And we read it together. And he said, "Well, I would have interpreted this." It was a great meeting. We had a whole conversation about it. So some of this stuff is up for not a lot of interpretation, but some of it is up for, you need to read it and know what it says. So there is no such thing as a red flag. Something's going to create a red flag. If you have a legitimate expense, take it. If it's a legitimate expense. What happens is most people try to take expenses that they know aren't legitimate by any stretch of the imagination. Okay? Travel tends to fall in this category. Okay? So what business travel is deductible? All of it. Anything that is legitimate business travel. So the airfare, or if you drive your car, or if you rent a car to go there, that's a legitimate business expense to get you to this meeting that you have to go to. So you fly in, you rent a car, you stay at a hotel, you have your dinners your food while you're there, your meeting expenses while you're there, you come back, tips, gratuities, parking, tolls, all of this is legitimate business expenses. Okay? So what happens? Well, the other question is I know a man, not a client. He's retired now, so he's not a client anymore. But he does not fly. He does not trust getting in an airplane for 1 minute, so he takes the train. I know it's hard to believe we still do have trains that go all across the country. There's actually he takes the Amtrak. Used to take the Amtrak from Greenville to Washington D.C. for his meetings in Washington D.C. He loved doing that. Yes, that is deductible. That is a method of travel that is deductible. What about a cruise ship? I wanna take a ship from Washington D.C. to California. Can I do that? Can I have a meeting, legitimate meeting, business meeting in California? Meeting with Nancy Pelosi to discuss with her the new tax bill. I want to get her input on it. Can I do this? Yes. The IRS will let you do it. There are some rules on that. They actually have governance and guidance on this. It has to be the shortest distance from port to port. So in the case of here, for North Carolina, let's say I got on the cruise ship in Charleston Port to where is Nancy? She's San Francisco. So I got to go see Nancy in San Francisco. So San Francisco Port has to go through the Panama Canal. Cannot go down through Patagonia. They won't let me write that one off. That would probably be a beautiful trip, going down through South America, but no, got to go through Panama. And there's a limit of expenses of how much you can spend. $700 to $900 a day limit on that per day. So let's say I think it's Charleston to San Francisco would be like a 10-day trip. Let's just say 11-day trip. You can write that whole trip off. Now the other question I get a lot of, this is the big question, is I want to bring my family with me. You can do that. You can bring your family with you, and so we've got a business meeting. Got a business meeting. We're going to be out west. We're going to be a couple hours from the Grand Canyon. I want to go ahead and bring the family, take them to the Grand Canyon, and then fly back. Okay, so you're going to have a 14-day. You're taking a 14-day trip. Let's just say 5 days of it is actual business. So you can deduct your airfare there and back. You can deduct your transportation, whatever that transportation is. You can deduct your hotel room. You can deduct your meals. You cannot deduct your families, but they can come with you. There's no rule. There seems to be this misunderstanding out there that if you bring your family with you, you can't write it off. An example of what happened to me, I just went on a business trip. I went on a 3-day business trip. One day, I was going to happen to be going to a city where I have family in that city. So one day, I was going to spend a day with some family. So I do not write off that day. The other 3 days that I was in business meetings, I write those off. But the day I did something personal, anything personal, that day I don't write off. I don't write off any of the expenses for that day. Didn't write off the hotel room for that day. But I still wrote off my trip down and my trip back because I had to fly down, I had to fly back. So this is legitimate. You can bring your family with you. You can write them off. The most important thing with all of this, and I can help you with the rules, and the rules are actually, the IRS publishes the rules. They're not a secret. You can get them, we can go over it. I can help you with that if you call me. But the secret is document everything. Document all your expenses. Save all your receipts. Orlando is a incredibly popular convention town now because people can come with their families. They go down there with their families. The children go do what they do. Dad or mom or both go do what they got to do with business meetings and stuff, and they can still have that family time together. Very, very popular. Orlando has become for this because of this. Las Vegas, on the other hand, is not. Las Vegas, but you do have couples that'll go. The wife can go with. The same rules apply. You still get to write off your hotel room, your transportation, your meals. You just can't write off for the non-attending person. And just document a lot. And don't make a vacation a business trip. Really, if you do 90% vacation, 10% business, you're better off just not even doing it, because they do frown on that. I've actually had that happen. I had it happen. Well, the man came to me for help, but it was too late. The damage had been done by the time he got to me. He posted his whole trip on Facebook. The IRS, well, yeah, why would you do even Todd is giving me a look on that one. Yes, Todd. Yes, and the IRS agent looked on Facebook and saw all the pictures of him fly fishing and said, "Where are the clients you said you took fly fishing with you?" And don't tell me they're the ones that took the picture, because you had a selfie. You had a selfie stick, okay? So where are they? And discounted the whole thing. And so don't do that, really. If you're going to take a vacation, take a vacation. If you can take a business trip, take a business trip. But you can bring your family with you, and you can have a good time. And that sounds like a good time. A cruise ship? Think about it. When I found out you could write that off, I said, really? Now, one thing they do frown on, and I've heard they're going to disregard these, is people that use the cruise ship as and bring all the employees with and have meetings and stuff. The IRS has said no to that. So there's a lot happening with the new. So if you have any questions on that, please give me a call, send me an email. If you're planning any travel and you have any questions, give me a call. These deductions can be very big. A trip like this, $7,000, $8,000, $10,000, you don't want your deduction disallowed just because you didn't do something right, or you didn't have the right paperwork, or whatever. Just give me a call. So next week, hopefully by next week, we'll have a date that the individuals can file their tax returns. The question I'm getting a lot is, will the IRS be holding refunds again for people with child tax credit, earned income tax credit, to validate if these credits were legitimate or not? I haven't heard, but I'm going to go out on a limb here, and it's really not a thin limb. I think they're going to. They did it last year and the year before, and they were very happy with the results. Last year, I believe they said they saved $4 or $5 billion in fraud that they caught, or fraud that didn't happen because of this maneuver. I know several states have said they're going to do it already. The state of Hawaii is just making it a policy. Every refund is being scrutinized, and they're being held for like 16 weeks. So it was policy last year. I assume it's going to be the same policy this year. So we haven't heard, but I'm going to say yes. What they did is, no matter how early you file your tax return, it didn't matter. They were going to hold it and scrutinize it until February 15th, and then release the refund, assuming it was good, by February 28th. Will they do that again this year? I would just count on it. Don't go spend that refund yet. If you haven't spent it already, don't. Just wait. And I think people are going to be a little surprised with their refund amounts this year. So the refund amount is going to be bigger. Okay, we pretty much know that because of the new tax law. But, so the refund is going to be bigger. But how much money are you going to get back? May not necessarily be more. Because if you adjusted your withholding, which a lot of people did, a lot of people didn't, but a lot of people did, you actually had less withheld. So even though you're paying less tax and getting a bigger refund, the dollar amount that you're going to get might be a little bit smaller than what you're used to, because you got the refund throughout the whole year. You got a bigger paycheck. This may happen to some people, okay? But don't panic. I'm not talking about thousands of dollars. I'm talking about hundreds of dollars from what I'm seeing. So just be aware of that. Just be aware of this, that this could happen. Todd, you didn't give me the 1 minute finger. Where's my 1 minute finger? It's now a 30-second finger. 30 seconds. It's 5 seconds. I'll be back next week. This is Gilbert Talks Taxes, WCAB 590 AM. Thank you for listening.
From ABC News, I'm Michelle Franzen. No deal in sight to end the